Let's talk about Kenya now. Let's talk specifically about the Kenyan property market. It's going through a boom period. Let me give you a couple of statistics. It says here that Kenya's annual demand in the real estate sector is estimated at about 150 housing units annually, far exceeding the supply side, which only offers 35,000 units, leaving an annual deficit, obviously, of 115,000 rand. That shows the demand for real estate in the country, and a 4% increase in rental income is estimated as well from real estate in Kenya. Now, of course, when there is a boom in an asset class, people tend to try and take advantage of that and monetize it, and that's exactly what's happening. And the Capital Markets Authority in Kenya has started a stakeholder engagement on real estate investment trusts. That's REITs in Kenya. It'll be the first of its kind. On the line now is Paul Mutara, who is the CEO of the Capital Markets Authority. Paul, thanks very much for joining us. Just give us a quick background before we get into the technicality of the REITs as to exactly how buoyant the Kenyan property market is.
No, thank you for having me. The Kenyan property market is really going through a very significant boom. The boom has actually been going on for the better part of the last 5 years, and that's what's really influenced the authority to look more critically at what are the available mechanisms to try and provide capital markets finance to really fill a lot of the gap that's been identified in the production of housing units, and not only housing units, but also commercial property, warehousing, and related type infrastructure.
Okay, so as I've said before, I mean, I'm not being cynical by saying that whenever there's an asset class boom, that people will seek to monetize it. You genuinely think there will be a benefit to both the buyers and the sellers and the development of the asset class in Kenya by introducing REITs?
Very much so, in that the approach in Kenya is actually twofold. We are not only traditional income REITs, where those are based on income-generating rental properties, but we've actually designed a rather unique product to respond to the needs of Kenya, which is looking at a collective investment scheme product that's designed for development and construction. What we've seen is the real estate segment is booming on the upper end, where very significant profits can be made, but because of the cost of capital, you've not seen the same level of development at the middle to lower income end of the market. So that's what in response to government policy, that's one of the things we're trying to target with the development REIT product, to try and provide cheaper financing to allow for the construction of more affordable housing based on larger scale, being able to tap capital markets financing.
Well, it's encouraging that you say that, because I mean, a lot of people might say, as I've said in my introduction, that this is just a money-making scheme. But of course, you're not going to go into a scheme that isn't going to make money for investors. But on the other hand, that 115,000 unit deficit that I spoke about will hopefully be alleviated by the fact that you are providing efficiency to the real estate market in Kenya.
Very much so. And also, one of the things we identify is, much as you said, people only invest where they're going to be able to make a return. So one of the key benefits we're seeing of this product is by filling the gap and providing financing for the middle, the missing middle. That will also serve to free up a lot of government capital to now provide the necessary financing at the very low level of the market, which may not necessarily be able to generate commercial returns.
Interesting you say that phrase, the missing middle. What do you mean by that exactly?
With the direction the market has taken in Kenya, we're seeing soaring land prices because of, partly because of infrastructure restrictions. So the distance from town people are living is constrained, so the availability of land to put up residential housing has been quite constrained, which has resulted in a very significant year-on-year spike in land prices, which are then being converted into very high costs on housing prices. Now, for us to address that issue, government is working very proactively as part of the vision to really ramp up the infrastructure capacity in the market, where they're building superhighways, they're expanding the road network, putting in commuter railway systems, all of which is to try to increase the scope of accessibility of land. And then we're trying to introduce now the financing mechanism that allow them to raise, developers to raise the necessary capital to put up affordable housing, as well as, but ultimately...
We'll have to leave it there.
Okay.
Sorry, Paul, we'll have to leave it there. Interesting story. Good luck with that. And as I say, apart from making money, hopefully it does alleviate the discrepancy between the buyers and the sellers. That's Paul Mutara, who is the CEO of the Capital Markets Authority, talking to us from Nairobi.